Okay, welcome back to chapter 22. We are still, I believe, in part A. There really is only part A. We finished the operating activities of a direct method, statement of cash flows. Now we're going to talk about investing and financing activities, which are a review for you, but I'll go over it just in case. So, investing activities, and just to remind you, in operating activities, and we'll just make a little note up here. Operating activities, we said we looked at the income statement, we looked at current assets and current liabilities. Okay? In investing, we're going to look at long-term assets and long-term investments. Making and collecting loans, acquiring and disposing of investments, purchase disposal of long-lived assets. So cash flow generated by investing activities shows if the business is investing in additional long-term assets that will hopefully generate profits and increase cash flows in the future. So, I'm sorry about that. So purchase and disposal generated by investing activities shows if it's investing in additional long-term assets that will generate profits and cash flows. Sorry, I had that up too high. Okay, so this section primarily takes into account long-term assets. If long-term assets increase, subtract the amount spent in this section because we purchased assets, used up cash. If long-term assets decrease, add the amount received for the asset to this section because we received cash. So that's investing. Financing activities are going to be what's left over. So investees were long-term assets, including long-term investments. So we've taken care of current assets, current liabilities, the income statement, and now the long-term assets. Well, what's left? Long-term liabilities and equity. So, financing activities, changes in long-term debt or equity capital, such as issuing or repayment of debt, issuing new shares, or repurchase of currently outstanding shares. So this gives potential for future claims to the entity's cash and major changes in the form of financing. So, if long-term liabilities or short-term notes, now notice short-term are current assets, but they belong in financing. They're the exception. Add them to this section because that means if you got a loan, well, you got money. But if they decrease, then you subtract them. So this is a source of cash. This is a use of cash because you paid them off. On page 4, if share capital increases, that means we issued shares, so add the cash generated to this section. If it goes down, subtract the amount of cash used. Cash dividends charged to retained earnings appear in the financing activities, so these are the ones you're used to, and they are subtracted as a use of cash. Temporary bank overdrafts belong with cash and cash equivalents. It reduces them. But they can appear in the financing section instead as a source of cash when used and a use of cash when paid off. So generally, cash and cash equivalents, but question will state if in financing. The financing portion of third-party non-cash transaction is included here as a source of cash. So that's a little bit Greek right now because we haven't done this little part. So non-cash transactions. Let's say I gave shares to someone in exchange for equipment. there's no cash that transferred. So over my career as an accountant, changed, I think, 3 times. Right now, you do not include on the statement. So if there's no receipt or disbursement of cash, so assets purchased for by debt or shares of non-monetary assets, so give me a computer, and no cash exchanges hands, conversion of debt to equity, so we saw some of that in chapter 16, issuance of shares to retire debt. They are not reported on the statement of cash flows. If they're material, they're reported as notes. So you'd have a note that said, exchanged 100 shares for, I don't know, 10 pieces of equipment. And you put a dollar value, whatever it is. Now, there's one caveat to that. If a third party is involved, so we purchase a building and land by getting a mortgage. If the company we bought it from gave us a mortgage, then it would be non-cash. But if there was a bank involved in getting the mortgage, there's a third party. In that case, the building and land are recorded in investing, use of cash, while the mortgage is a source of cash. So that's what they're talking about up here. This relates to that. Okay. And finally, so you'll have the 3 sections. You're going to see operating, investing, financing, and then this bottom portion. So the bottom portion of the statement, change in cash and cash equivalent, calculated by summing the 3 sections, so 1, 2, and 3. Add the beginning cash and cash equivalents balance, and you should get the ending if you've done it right. Now, you could still have them misclassified, but you'd balance. And you can look at sample statements throughout the chapter for the format, although you've already done these statements in 2 different classes, so you did them in 315, so it should be quite a bit of review. Okay, so I'll just finish off on page 5 before we get into the examples. The disclosures. IFRS and ASPE require similar disclosures on certain items, including significant non-cash transactions, policy on what cash and cash equivalents, and reconciliation to the balance sheet accounts. IFRS also has more strict requirements regarding income taxes, interests and dividends, and restrictions on cash and cash equivalents. Okay, so just looking. So the questions will be on Wiley Plus. We're going to go over an example, Eastern Window Products. That's going to be example 1. And it's on page 6. Yoshi Corporation is in your text. You can work on that, and believe it is difficult. If you can do that, you can do anything, but your question is not going to be that difficult on the exam. I also put under class notes, can't spell, example 2. So print that off, because I'm going to do example 2, then I'm going to do the Eastern Window. I found students difficult to remember how to piece together some of the transactions with a sale of assets. So I did a separate example. Anyhow, go ahead and print that off. I'll do this one in the next video, and then we'll go and do this example one. Here's your problems. Make sure you only do the direct method. You do not need to know the indirect. Okay, so the next video we'll be getting together to do example 2 that you can print off from under class notes. It's right at the very bottom of that section, and we'll come back and do that on the next video. Okay, bye.